What's going on, guys? Welcome into your Energy News Beat here on this gorgeous February 3rd, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Tully, how you doing today, my man?
It's a beautiful day in the neighborhood, and I'm coming here from Bear Country, and I sure appreciate your opinion of our site.
Yeah, and well, first off, it's gorgeous here in Denver right now. I was just outside. I didn't have a shirt on, getting a little tan in right now. So, I know everyone was flocking over my house, but it's just okay. We're just there for a little bit. Stu over there, Becky, you can check out everything we have on the show in a bag of chips to my left here. But before I dive into the equities, guys, just subscribe to the Energy News Beat via YouTube, world's greatest YouTube channel. Best way to stay up to date on all of your energy news in video form. Also, check us out on the web, www.energynewsbeat.com. Click the little notifications button in the bottom right-hand corner. It's legit just an IV of news. There's no reason to go anywhere else. We've got all of your news. EnergyNewsBeat.com. Equity is interesting today. So, let's go top line numbers for a second. SPY's up a half a percentage point. Nasdaq's 0.3 of a percentage point. Dow Jones basically finishing flat, about 0.05 percentage point. But our XOP contract, the part of the S&P 500 that's related towards oil and gas, I usually read it later. I'm going to tell you now, it was the leader, 4.6 percentage points. So what an odd day for equities. Normally you see it's the exact opposite. Good to see. Couple things to note here. One, we had a lot of corporate earnings that came out. Alphabet dropped this morning. They popped more than 8 percentage points, which is interesting because you've got Amazon coming out. They blow out $125 billion in revenue. First time a company has ever had, or the first time Amazon has ever had $100 billion in a single quarter. They also announced, as I mentioned yesterday, that Jeff Bezos was stepping down as CEO, being replaced by Andy Jassy. They actually traded about a quarter of a percentage point lower. Amergen, another big Dow, blue chip Dow company, they fell 3 percentage points. So it is interesting. We had Apple, Alphabet doing well. It's partly why you see the Nasdaq up. The other thing on the data front. Private firms added 174,000 jobs above the 50,000 that were estimated by Dow Jones, according to a Wednesday report from the payroll administration. So again, choppier waters in the markets, but as I mentioned, our S&P 500 on our E&P side actually did very well. Moving over to crude oil, again, why E&P did well today was because crude oil's up almost 2 percentage points. We saw $56 at one point for our top line front month contract, currently trading 55.78. But as I mentioned, daily high was 56.33. I mean, it was a tear in that morning session, man. I was watching it skyrocket all morning, back into the curve, 52.89. That's 1.5 percentage points on the upside. Natural gas, little pullback down 2 percentage points, $2.77. Still that cold front coming in, but today's morning price action, in my opinion, really shows the fact that all this weather has now been priced in, and we're going to see even a bigger turn in the weather models in order to drive that price down. Probably nice little range bound. I got a nice little band from 280 down to 275. So, we'll see what natural gas is. Back into the curve down 1.4 percentage points, $2.96. As I mentioned, XOP was up 4.5 percentage points, 68.94. OIH, which is Oilfield Services, it was up big, 3 percentage points fully, 170.70. That's $5 in that index. I mean, there's some big movers on the day. We still have some numbers on the downside. About 12 companies finish on the downside. Specifically, Warrior Met Coal, they're not having a good year. They're down 2 percentage points on the day. Permian Royalty Trust, they're down 2.5 percentage points. Hess Midstream down 3 percentage points. Let's go and check the upside. SM out of the Permian, they're up 11 percentage points. Tensico Gas up 12. Haldor Energy up 21%. And American Resources Corporation, Go America, we're up 40 percentage points. Stu, internationally, what do we have today, my friend?
Oh, it's big fun and international. You can't buy this kind of entertainment, Michael. Okay, first one coming around the corner is the JMMC. Optimistic for the year of recovery in 2021. Countries to remain vigilant and flexible given the uncertain market conditions. Now, the JMMC is the organization or the committee that monitors the OPEC and OPEC plus non-OPEC minister, covering all of the things that I've been really big on, and that is, can they prove what they're producing? And I think this is just really funny. The committee, this is a quote, I believe from the chairman, the committee welcomes its positive performance of participating countries. Overall conformity with the original production adjustments was 101%. Reinforcing the trend of high compliance of participating countries. Huh.
IR guy to with Newton. This guy's up for IR guy of the week. Early running IR guy of the week.
I think he's going to get our nomination for IR guy of the week. I'm calling
Well, he's getting a
bullcrap on that.
nomination. We'll see what happens the rest of the week. We got a lot of earnings that come out. Who knows what's going to happen in some of these earnings calls. Last week, as we mentioned, we gave it to EQT's IR guy for coming out with responsibly sourced natural gas. Early nomination this week. I love it. Great quote. How do you say that with a straight face after seeing all the Iraq, all the Iran stories you've been running? I mean, if you've been following the show, this should just make you howl.
The only one that's even better than that is that young man from India that said electricity is the next power source. Okay, nice.
Close
all right,
enough.
moving right
He's
along.
in the running too.
Okay, Shell. We've been talking on the show. This article is Shell targets power trading and hydrogen in a climate drive. They're taking a different path. Okay, BP. They're going this way to an energy company, what they're saying, but they're actually doing something weird. Exxon Mobil, all these others.
They're greening.
They're a greenie. That was a good article we ran yesterday. Dutch Royal Shell, though, is going down a different path. They are, Michael, I believe they're the number one natural gas trader.
Yeah, we talked about Shell, some Shell trading yesterday in the show. Yeah, they're the number one world liquids trader. They do about 13 to 14% of global energy or global oil capacity.
Right.
Yeah, right up there with BP. I mean, if you're an oil and gas trader, the gold standard, you want to go work for Shell or BP, man. Those guys, they do it right. Their operations are solid, and part of the reason why these super majors got saved this year was because of their trading outfits. I mean, bonuses should be around for all of these people because they saved them.
Oh, absolutely. And here's a quote from Chief Executive Ben Van Beurden. The future of energy is particularly bright for our marketing and our customer-facing businesses where we already have scale. So we will accelerate a growth plan which is already underway. Great quote from Executive Ben Van Beurden.
You know what I think? Can I give you my thoughts on? Oh, sorry. Go ahead, Stu.
Go ahead, Michael. Go ahead.
I read this article this morning because you sent it to me. I think they're all about carbon capture. I see BP and BP and Shell trying to come in and say, okay, we're going to basically get credits ourselves by producing clean energy and sell them through their marketing services. It's going to be unbelievable.
Exactly. They are taking the different path. And the other quote in here was, I thought, just absolutely solidifies your comments right there. And it is, they don't want to go head to head with somebody else in some place that they do not have the competitive edge. Just right into what you said, Michael. Great job. Okay, here we go. Last story, hot take of the day. I have to hand it over to DRW. I really respect his opinion on everything. He has on here Wald Wednesday's carbon credits, big finance, big oil, big billionaires from hot take of the day. And she is a PhD. And
Ellen Wald's her name?
Yes, Ellen. Very, very sharp. I've been following her. And her book is Saudi Incorporated, a good book. I bought it, but I haven't read it yet. Now, all that being said, yesterday we had the China shtick where they came up with a carbon credit scheme. Mm-hmm. Okay. They're talking about BlackRock, Fink, saying, hey, wait a minute, we are going to go ahead and start taking a look at carbon credits, ESG, and everything else. I personally think carbon credits is a way to be a scam. And Ellen really outlines it very good. Sign up for DRW's Hot Take of the Day. It's in the show notes. And back to you. And I want to know your thoughts later on or now on the carbon credits, because I think it's personally a scam.
Well, as an economist, I actually like the idea of cap and trade. It actually appeals to me better than just saying you can't emit more than this. Because the free market, as an economist, my philosophy is, how do I let the free market work as efficiently as possible? We understand that we can't just be producing all of this emissions. I mean, even the most hardcore energy people or oil and gas people understand, like, we can't just be flaring 20%. That's a terrible idea. So from what I've seen, cap and trade generally works the best. But what happens? Companies who have the ability to make carbon credits because they are pulling in from the environment, or who, in cap and trade, everyone gets 500 credits, and then if you don't emit any, you get and then sell those credits to always end with zero. So, yes, will this create a marketplace where just credits will be bought and sold? Will we be buying carbon futures in the future? Yes, I will be buying carbon futures in the future. Pun intended.
Do you know what the loophole is that goes for making this not a conspiracy, but a methodology for being able to go around the system, and that is a 100% lack of accountability and structure on how to handle this. It's having like IR guys make up whatever they want in order to be carbon neutral. There is nothing on there to keep this in line. You nailed it, Michael. My thing is there's no accountability.
Yeah, the SEC is going to start watching spoofing on carbon futures. What is this world coming to? Holy smokes. Thank you, Stu. All of those international stories via the world's greatest website, www.energynewsbeat.com. We had a heavy earnings day yesterday on the U.S. side. Luckily, today's a little light. We'll do two. We'll do one earnings. I've got a guidance update, but first we have to cover crude oil drop. Part of the reason why we saw crude oil spike up to 55.74, like I said, about two percentage points on the day, was yesterday. API predicted a negative 4 million barrel draw. Today it dropped only about a 1 million barrel draw, so a little bit of difference. But I know I always tell people it's the difference between API and crude oil. Well, today the sentiment is shifting a little bit. The sentiment is shifting towards as long as we're drawing in this environment, it's the continued bull. So even, yes, the API was higher. If you actually watch the way that was traded in the pit, it did fall a little bit. But the sentiment is we're drawing from stocks. Oil prices are going to rise. 10.9 million for domestic production. That stays flat from last week. Probably one of the most. Don't even really need to look at that number, but it's always nice to see what the EIA says. Here's my key. Refinery utilization total up about a half a percentage point, 82.3. It was at 81.7 last week. The key is, unfortunately, we saw about a 0.2 percentage drop on the East Coast pad, which, as cases rise and you lock down. That's really where, if you want to see how demand looks on a week-to-week basis, it's these percent utilization numbers. It's about as frontline as you can get. So some of that data, it's bullish. It's enough to bring it up. The fact that we're $55 is still pretty crazy to me, but hey, let's get behind it. As something you learn as a trader, markets are always right. Markets are never wrong. It's you that's wrong. Get behind it.
Sounds like a marriage.
Exactly. Magellan Midstream, they came out today and reported fourth quarter earnings, guys. This is a limited partnership, so not the biggest fans of the way these guys distribute cash. They don't actually have shareholders per se. It's a limited partnership, so you can buy it on the open market, but you don't actually get equity in the company. You can buy shares, but the equity doesn't necessarily mean anything. And so what that means is we walk through, they reported an income of $183 million, $183.9 million for fourth quarter 21. They had about $286.4 million last year. The decrease comes amid COVID-19, obviously. Diluted income per common use. This is interesting. Not per stock. Diluted income per common use, 82 cents, and one as compared to $1.25 in fourth quarter 2029. Here's the key, guys. Distributable cash flow, and this is this is the key. Distributable cash flow is only available to the limited shareholders. So to give you guys an idea, that's a non-GAAP financial number, but it represents the amount of cash generated during the period that is available to pay distributions. Distributions only really go to the limited partnership. That was $269.7 million for the fourth quarter of 2021, which was a little lower, but you're talking about these are cash cows if you're in these limited partnerships. Quote out of Michael Mears, CEO of Magellan, we also returned nearly $1.2 billion of value through our investors through payment of a consistent cash distribution and equity repurposes. What does that mean? They're also buying their own shares. These limited partnerships, we could a whole segment on them. And how interesting they are set up. Both pros and cons. I think some people would tell you there's more cons than pros. I don't know. It's like everything. It's a mixed bag with a lot of this stuff. So midstream, it was interesting. Really, it was their refined products that got hit. It wasn't actually their marketing of crude oil. It was really their refined products marketing, because that obviously refined products goes more as a jet fuel, goes more towards some of the stuff that's been shut down during COVID. So not that big of a thing. They were actually up about, or they were only up about 0.8 of a percentage point today. Currently trading $42.09. So pretty flat. Like I said, the fact that it was the refined products that was bringing them down, I think, is what buoyed investors to go ahead and say, let's just get back into this for that distribution. Earthstone, they came out with their operational guidance. They're a little small Permian company. I always like to know how these small Permian companies are doing, because it just gives us a good idea of what's going on. They had record sales volume in 2020, by the way. 15 million barrels, 56% oil, and it exceeded their top-end guidance. Their 2021 production guidance coming in at 19.5 BOE per day, or 19,500 BOE today to about 21,000. That's a 52 to 54% oil split, so that's not bad. Guidance of about 90 to 100 million in capital expenditures. And they reduced their debt by 32%. They signed a little purchase agreement with an independent with the acquisition of Independent Resource Management. They have about 100 million undrawn on their 300 million senior secured note. Cash balance of 15 million at the end of the year. So I mean, hey, it looks good. Investors love them. They're up 8 percentage points today after this, especially, and really since last November, they've been on a tear. So,
good management, good numbers.
Yeah, I mean, you want to talk about a company that's a prime target to get taken out in this environment.
Oh, as a good asset, they're good people.
Yeah. So, anything else today on the day show, Stu?
Got to go get some more news.
That's what we got to do, guys. With that, we're going to get out of here. Let you get back to work. Finish every day. Thank you for checking us out here in the Energy News Beat. For Stuart Turley, I'm Michael Tanner. See you guys tomorrow on the beat.